Hey, everybody, welcome to Decelerator. I'm your host, Rob Kennedy, and today I'll be talking once again to Ryan Henry. Ryan is a partner at, the partner at a family office out of Montreal, and he is a venture capitalist, but he invests very differently. While he tries to run his fund like a proper venture fund, he has only one LP to please. And so he invests in a very different way, or doesn't need to if he doesn't want to, which is super different than most VCs you talk to. And he tends to only invest in San Francisco-based companies that are working on kind of the cutting edge of what's going on right now, specifically, typically YC. So I wanted to talk to him about the patterns he's seeing, agents, obviously, a little more about how his fund works. I had a podcast that I was on that I talked about vibe coding, and he had a issue with my way of characterizing it. So we had a little debate on that. And I just wanted to get a state of the union about what's going on in the Valley and how it's going to affect the kinds of investments that he does. So once again, Ryan Henry. All right. Well, Ryan, thank you for coming back on the show. We're about 10 episodes in that are at least canned, and you are the reigning champion. You're back for a second episode.
I'm the winner.
You're the winner. You get nothing.
Have a prize next time.
I'll send you.
I'll send you a
winner. Exactly. I'll send you a piece of cardboard. Anyway, I should start making trophies, challenge coins, maybe. Anyway, for those who didn't watch the last episode, what do you do with your time? Who are you?
I'm a technologist, but in my day-to-day, I'm an investor. I run the venture arm of a single-family office called Sandhill North. So we invest in B2B pre-seed software companies in North America, Canada, or US, I should say, and mostly in the US, but I like Canadians. And in particular, more on the deep tech, harder tech side of things, but not hardware. So this slim sliver of software deep tech.
So, right. And so what's interesting about you, we're going to get into some nerdy stuff like we did last episode, but one of the reasons you're on this show, other than the fact that we get into good arguments about things, is, and we're about to, is the fund structure. So we're going to talk fund nerdy stuff for just a second, and then we're going to talk nerdy AI stuff. So on the fund stuff, you don't just invest in startups directly, you also invest in funds. Can you explain that strategy and why?
So we invest in funds really. The simplest way for me is really just to say as a source of deal flow. So because I'm a solo VC, solo investor, I don't have a team. I have a CFO that works in the family office and some lawyers that help, but really it's just me on the investment side. And so because I'm one person, and even in just the US alone, there are thousands of funds and thousands of pre-seed companies to see. Obviously, that's too much for one person to do. So I invest in funds to see their deal flow, to see what interesting investments they're doing. And really, I feel like the more that you're in the venture game, or really whether you're investing, frankly, probably in any game, the more you're in it, that network that you build up matters a lot. So to me, it's a way to build up that network, see lots of things that I'm not seeing, be in areas that I'm not physically always able to be in, whether that's New York or I can only get down to the Valley once a month, once a quarter. So it really just opens up more opportunities.
Interesting. I'm going to New York next week, so maybe I should start a fund. But math, what's interesting is we've talked about this on the last episode. If you want to get into the sort of thinking behind Ryan and the fund, TLDR, you have set up your family office fund, the family office fund, like a fund, like a venture fund with a certain time horizon or whatever, but you do have some flexibility on that because you don't have wacky LPs who you've made promises to.
Yeah, I work for a single family office. That is one single investor, one single LP. Unlike many other larger VC funds, they'll bring on some number, 50, 60, sometimes 100 LPs, and they have to obviously balance the desires of some of those larger ones to a certain extent. Whereas I just have to convince the family office. It's a tech investor or a tech founder from the .com days. His name is Dave Brereton. I just have to convince Dave that this is working, that we're investing in the right areas, that the strategy and the portfolio strategy makes sense. And so really, I do think about it as mimicking a microcap VC. We're not like $100 million fund. So I mimic that strategy more so that I can compare to funds and see how are we performing. Because if I'm not able to outperform those funds consistently, well, we should just invest in funds, and I shouldn't do
Mm.
direct investing, or we should fundamentally change our strategy. And so it's really just a way to hold myself accountable, build up uh, I guess just do the exercises, make sure that we are doing it in the best way possible, learning from all of that, and then maybe someday we do open it up to other LPs, and we create turn the family office into an actual VC fund if we can show that we are one of the top performers.
Interesting. Does that make you a first time VC? Like if it's a, you know how it's like there's what's it called? Like a first time VC or
Emerging
even though you've
manager.
been running a fund, what's it called?
An emerging manager.
Emerging man. Are you
Yeah.
emerging manager if you open up to LPs even though you've been running a
Yeah, that'd be a good question. How would we be treated if I do this for 10 more years and then we open it up? How would
Yeah.
I be treated? Would I
There
would
are
I be
VCs
the
in
new
our
emerging
ecosystem
manager?
that are that, right? That
Yeah.
are like have been doing it for a
Yeah,
long time, but
the whole
haven't.
concept of like between fund one and fund three, where you're really proving out your
Yeah.
thesis of the fund.
Yeah.
And I mean, again, even thinking about that, that mindset of like, how do you what's your first fund? What's your thesis? What do you need to learn in your first fund in order to do fund two? How do you change that strategy in fund two? We went through that same process. We started investing in Canada, pre-seed and seed B2B. We did a couple Series A because I was really trying to find like what's our sweet spot, where's my
Mhm.
network. I kind of arbitrarily draw the line of when we mostly then focused on US investments as kind of like we're starting fund two because we changed the strategy very deliberately. Obviously did a bunch of modeling to figure out like where to change and how to change. So I'm sure that'll change for what we consider our fund three as well.
So, okay. So you're a seasoned VC and an emerging manager at the same time. Got it. But what I wanted to pick on was the investment in funds as deal flow. The reason I wanted to pick on that is um, in this market, in a non-US based market, which Canada is, uh, it's difficult to start an early stage fund these days because of expectations and a bunch of other stuff. Um, do you the thing that interests me most is your outcome requirements, and this is interesting for especially for entrepreneurs who need to understand what motivates the venture capitalist or any kind of investor who's putting money into their fund. um, what you have a different expectation of your investments in the VC world. I mean, obviously you want the typical venture style outcome, but it's not only that. Does that change? So explain how you think about that investment and explain whether that changes the math in any way, shape, or form.
Yeah, I would say that was also one kind of area of learning and one strategy that we refined for Fund Two, where I think we are looking for more typical VC style returns in the sense that we would like our fund, even a smaller fund, to be a top performing fund of like a, let's say, returning 5 or 10x or something like that.
Right.
It's not that simple, but that means that every investment that you do has to be able to return, say, 10x the fund or something like that, or at the very least, for larger funds, maybe like a 1 to 3x the fund, and you hope you get a couple winners. So the math from a venture capital fund, when they're making an investment, is very much that the potential return on that single investment has to be more than the fund,
Yeah.
sizable return. It's
Yeah.
not just like some small percent of the fund.
Right.
Um, and so that means you end up with a bunch of investments that outright fail or don't return much capital. And it's fine. You could have, I mean, in our current fund at the pre-seed stage, we can model really up to, say, 70% failure rate, as in those investments don't really return anything, and still make the numbers work, still make the math work. And if you structure it right, this is the difference of when people talk about spray and pray. It's really the power law style returns, where you're investing enough to de-risk the potential outcomes to hopefully find that crazy winner. And so I'd say now we're probably a little more aligned as a typical VC, but obviously on a smaller fund, and smaller funds typically have much higher returns than, say, if you were $1 billion fund. That's obviously harder. The math is very different. But in our fund one, we definitely experimented with some not quite venture returns, or we didn't necessarily require that. And we could either take a larger piece of the investment, or valuations are lower, or different return structure. Maybe the company structures it not just as pure equity, but maybe they're trying to pay a dividend or something like that. So I mean, it's worth talking about that from the perspective of like, certainly the VC world is nice and, I mean, simple in the sense that there's lots written about it because there are many VC funds and the structure is pretty consistent. But there are lots of tech investors, lots of investors who aren't necessarily trying to mimic a VC fund, and that return structure and how they invest and why they invest and the type of companies they look for can be completely different. And until you talk to that investor, you're not going to know that.
But specifically, when you invest as an LP, limited partner, in a fund, so you're not doing direct investment to entrepreneurs, you're investing in funds, you said, for deal flow.
Yeah.
What is your expectation? I mean, obviously they are venture funds, so you want them to perform as venture funds, obviously. But, you know, how
But
do
I
you
am
look at
investing
the
in them for deal flow. Yeah, it's certainly a good point, because there's this balance of, as much as I'm investing in them for deal flow. I mean, if they were such low performing funds and that didn't actually like the math didn't make sense of them actually returning me money, even though like they could be giving me great deal flow, but maybe it's low quality deal flow. So there's this balance of like, I am investing in them for deal flow, which means that that's the primary thing I'm looking for. I don't,
Right.
I care a little less if they're not the top performing fund, as long as they give me deal flow consistently, or at least diverse deal flow. But at the same time, that deal flow still has to be good quality. If it's good quality, they're likely going to be better returners as well. It's just not a single, like, I just need them to be the best performing fund in the world, otherwise I won't
And
invest
so
in their next fund.
just that's fascinating. So it's like, cool, if you, as long as you don't, poop the bed, you might not be, if other LPs might be like, nope, this is my unicorn or die one. You might be like, is there, can you put math to it? You're like, okay, you return, because venture funds don't tend to return what they say they want to return, at least the data shows. And so you're like, yeah, I do the 2x that you or the 1x that you
The
really end up
interesting
doing, and
thing,
that's
even
cool.
for the top performers, I mean, like the top performance aside, but even like the top, let's say the top quartile, take out the top
Yes.
decile. If you
Yeah.
look at the top quartile, they may have in their past like one really good fund that put them on the scene, and kind of now it sets them up for a bunch of LPs to invest. But
Yes.
their subsequent funds might not have been the best performing. And again, it depends on the LP. Some LPs will keep investing in them because of that relationship, or because of the network, or because that's just the space that they know, or the team that they know. So again, there's not one reason that people will keep investing, but obviously having one high top performing fund in your past is going to put you on the map.
But I guess my point is, for you, at least for how you think about it, you want the 10x fund maker, fund killer win. Realistically, the returns are, I don't know what even the top quartile returns are, something like 4x, 3, like, right, on good funds. They're not
I would say like maybe at the like 10th percentile, it's actually probably a little bit above. But the difference is like the ones that do well. Like if you look at
too.
only like the top percentile,
Yeah.
like
Yeah.
the high end is crazy high.
Yes. Yes.
But
But
that
for
like
the
that's
most part, they're not, right.
yeah.
It's
And
gambling.
so yeah,
It,
like to the fund managers, to the GPs listening to this who are trying to raise a fund that want to talk to me as a potential LP, uh, the thing that I care about is that you send me deal flow. It's funny because like I meet probably not as many funds now as I do companies. But there was when we were starting to invest in US funds, there was like a month period of time where I met like 150 funds, some
Mhm.
small, some big, some well known, some not. And like the very clear thing I say in meeting one is, here's why I'm investing in you. I want deal flow. So between now and when I actually decide to invest in you, send me some deal flow. Like, let's build this
Right.
relationship. Let's
Right.
see, like, let's get in the habit. Like, I want to see you actually be able to deliver. It'd be no different than if I invested in a company. I was like, the thing I want you to do is this, like send me updates or hit some traction or like whatever. But I try to be clear of like, this is what it would take to get me to invest. And the number that just like don't follow up. Maybe because I'm one of, again, thousands of LPs that they're talking to, but that seems just like a bad sales person. And I would certainly never invest in that fund if you can't follow up.
Yeah, and again, I don't mean to. I don't want you to start getting crappy offers. because of this. But my point is, old-fashioned generic LP wants 10x, knows that they're probably going to get 4x or 5x, and you're like, even if I get like 2x or 1x, if I get deal flow, I'm weighting that a bit
Yeah.
heavier than a typical LP. So
Yeah.
that's interesting. And then the last question, and then I want to talk about vibe coding, is uh, if they're passing you deal flow, are they, like, if they're good deals, they probably want in on them too, no?
I mean, yeah. So, and this is actually where the rubber meets the road, and it's not always easy for other funds to send me deal flow, because sometimes they want to only send me the deals that they're going to invest in, because if they don't, then for some other investors that they're sending that deal flow to, maybe the natural question is, well, wait, you didn't invest in it, like, why are you sending me this garbage?
Mm.
So it really depends on that relationship, and I do try to spend time with the funds and GPs that I invest in to be clear of, like, here's the type of deal flow that I would like, here, like under what circumstances, like certainly if they're investing, that sends a signal and I'm happy to look at those.
Right.
But I don't even want them to have like warm introed the founder, in the sense that like that bigger fund is saying to this founder that's like, you need to talk to Ryan because he's one of
Yeah.
our LPs. Like, I
Yeah.
don't even want that. I literally just like, who are
Totally.
the companies that you're seeing? Like, what's your, not like top of funnel, because that's mostly garbage, but like, what's your like first or second meeting? Like, you really, there's something about it that you like, it's a space that you like, or even if it's not a space that you like but you know that I like it's good enough quality. Just send me the name of the company and maybe even the founder name or founder email. Like, I can do my job well enough to find that information, but even if
Yeah.
you're just sending me the company name, I
Right.
can do the rest. Like, the more of that type of deal flow I get from a fund, that like I can obviously give them feedback and be like, more of this, less of this, and we build that relationship. But I'm going to do all of the work, just like they did, to go and actually do the intro meetings with the founders, learn about the company, make decisions for them. I'm a, probably like every other VC, I'm a very opinionated person. I care about this particular thing. So even if they think it's an amazing investment, like, I'm just be like, yeah, it doesn't work for me. Like, move on.
Understand. Yeah. So it nominally could be competitive, but isn't really necessarily competitive, because at the end of the day, um, they invest and you don't. You both invest, which is good because you're an LP, and it just kind of just gives them an extra bit of juice on their investment. Or you invest and they don't, but in any case, it's not really
And
competitive.
especially
You
at
know,
the earliest stages, I
yeah,
find that very few deals are that competitive. Now, when you're talking about, like, imagine you were talking about Cursor back in the
yeah,
days, like, I'm sure that round, even though like no one knew they'd become like the Cursor that they are today, like, I'm sure that round was a little more hot, and it probably didn't take long for them to fill it, and so there is some level of competition there. I mean, you see this in like Y Combinator investments. If you,
right,
especially if you're waiting until demo day to meet these companies, like, now you're competing against thousands of other angels or funds, and like some of those rounds do fill up quickly or have already been filled. So
right.
the timing matters. There is some level of competition, only because fund size or round sizes are so big, but it's not that competitive, and so they'd be happy to have me invest. And really, even if like the round is filled and I still reach out to the founder, like, can they squeeze in another 50, 100, 250K in the round, and is it really going to change the math? Like, I have maybe only once or twice met a founder who like really just outright said like, no, I'm not going to take your money. And that's fine.
Uh, Yeah, that's cool. It's actually, that's a good segue. Actually, and Cursor, for those who don't know, is basically an AI layer on top of an IDE. So if you're writing code, they've AI'd up software development, so it does write some, all, none of the code that you're doing. And I think, as of recording, I think it was OpenAI just bought Windsurf, which is
Windsurf,
also
yeah.
a software development platform. Um, but since we're talking about software development platforms, let's get away from fund economics for just a second. Um, let's talk about, so one of the things that what's fun to have you on is because you have your ear to the ground of kind of the latest and greatest that's coming out of the valley, because that's where you spend a lot of your time investing. um, and what was in the last cohort, uh, the Gary Tan was like, "Yo, vibe coding is all the things," and everyone's like, "Vibe coding." So do you want you? And then I went on a podcast and I was like, "I don't know, man. I don't think it's a thing." And then you said to me, "I think you're wrong." So, or that you're wrong. You have a bad take. So why don't you explain what vibe coding is, and then tell me why you think it's a thing and I'm wrong.
Yeah, so the term vibe coding is probably uh, grown a little bit since its inception, but the initial
Yes,
term
months
of
ago.
vibe coding. So maybe it's even to take a step back before defining vibe coding. Let's talk about
Okay.
Cursor for a second. So if
Okay.
you're a developer and you're developing in Cursor, which is just an IDE where you see all your code, you've got an integrated AI chatbot where you're like, hey chat, whatever AI agent or whatever AI model you're using, hey AI, write me a function that, I don't know, does some basic multiplication and then like randomize the number, something like that. And then so the AI model would go and then just kind of spew out the code. And in the original Cursor days, probably still to a certain extent, but like as it spewed out that code, as it made changes, it didn't just make the changes. Like you'd have to like approve it, because early models were error prone, really not that great at listening to what you wanted or understanding what you wanted, really bad at having the whole context of your application or code base. And so like it'd give you something, but you'd want to review it. As the model quality improved, and let's say pre-reasoning model quality improved, you got better and better outputs. And then especially once the reasoning models came out, it got to the point where most of the stuff that it was spewing out and recommending was good enough or great. And you'd sit there and be like, yeah, review, like accept. And half the time you're not even like actually reviewing it,
Yeah.
especially when it's making like 20 or 30 or hundreds of changes. Like it just didn't make sense. And so people just like the whole concept of vibe coding is like, yeah, just accept. Like I'm sure it's right. Like, and if it's wrong, like we'll figure it out and we'll go.
Okay.
And I think now there's the default option of like just auto accept and we'll figure it out. And so that
Right.
really now the concept of vibe, it's like the vibe really depends on both the model and how you're talking to it and what you're building. And it's
Okay.
like let's just go and build this. And so what you're like, if you follow that trend, like if you started with models that weren't necessarily great, they got a little better, then you had reasoning models, you're getting better and better outputs from, let's say, zero shot outputs, the first response to a single prompt, not having to iterate on it a bunch or not asking it to generate 5 versions of the same thing. Just that initial zero shot is getting really good and able to do way more complex things, to the point that like now I think so yesterday Google released Gemini 2.5 Pro experimental update May 6th. They need to get better at naming of these
Oh
things.
my God. All of these companies need to get better.
Yeah, but like you can, I think they gave an example of like the simple prompt was like generate me a healthcare CRM that, I don't know, improved patient communication or something. Like that was one of their demos. And again, with no follow up, no nothing. Like Gemini spent a couple minutes just spewing out this code, and it's a good, decent web app. Like it's got initial authentication. It's good. And so when you have models that are that good, able to do that much, you're gonna, like, as a developer, you're gonna rely more and more on it to do more and more and more. And so that vibe coding, the world that we're in today, starts to abstract away more and more and more of the work that any single developer is going to do.
Yes.
And now the conversation that I think it was you and Douglas had on
Yes.
the Beta Kit podcast was around vibe coding and some of the dangers of vibe coding. And I think one of the examples was somebody had vibe coded an app and there was some big security issue,
Yeah.
and it's something I can't remember the details, but like certainly like if you don't spend any time, like if you just like in a weekend be like, hey, build me a healthcare CRM, and then you went to like sell that healthcare CRM, I'm sure there are security issues, like sure there are security issues with that today. And so you should obviously, as a developer or a founder, do some of your diligence and make sure that like you've thought about security, you've thought about authentication, you've thought about how it's going to be used, you've thought about how the system breaks, but also like you've thought about documenting your code, you've thought about running test cases, you've thought about all this, the things that like developers
A
would
real software
typically do.
developer.
But more and more over time, the base models are going to be able to do more of that. But we're also seeing other companies, other software come about that says, well, after you vibe coded your app, now run our security agent, now run our design agent, now run our X agent. And the thought behind that is now you've got this whole other model that's looking at your code very specifically for issues or for opportunities or whatever it is. And so you're having more and more things kind of layer onto that. and we're just in this messy middle world where you can be lazy, and yeah, vibe coding is probably not the best idea. It works really well for prototyping, but is certainly not the way that future development will be. But
Mm.
6 months, a year from now, it's certainly going to be the case that any developer who vibe codes a healthcare CRM in an afternoon is then going to have a bunch of other apps or processes or whatever you want to call it go through and kind of refine that CRM and make it safer and make it stronger and better. And this is all just talking like strictly about zero shot, not the
Yeah.
ongoing effort to continuously improve it.
So interesting. Okay, so I think a couple things. First is that definition is really interesting because I think there's like a they're speaking of vibe coding, they weren't speaking of like what's again as of recording of this, which will be obsolete in a month. There's tools like Lovable or which are very much like prompt and publish
Yeah,
a
yeah,
web application basically, and you're not actually really looking under the hood. Whereas to your point with Cursor or a lot of those other tools, you're still a software developer in an IDE writing code, and it's just writing the code for you. So you're like aware of what's going on. Was he talking more about the latter than the former?
yeah. I think it was Carpathy that termed the code vibe
Yeah,
coding,
it
and I
was.
think
Yes.
in that example, he was talking about more of the actual real coding, not
Weird code.
the
Yeah. Okay.
low
Yeah.
code no code apps.
Okay.
I think those two worlds do merge, and I also should caveat this by saying like there's definitely going to continue to be a world where the whether it's a certain type of developer or a certain type of code, if you're talking about code that is like going to fly an airplane or something like that or drive a car, like probably needs to have another level of safety or security or something like that. Like you're still going to have, this is where like more trained, more experienced developers will still exist. But I think the low end world, like the world of prototype apps, one shot apps, weekend apps, like random mobile apps that I build just for fun, like that whole world is probably going to merge, whether it's vibe coding or low code, no code. It's all the same thing.
Got it. That's interesting because I think I was less concerned about the security stuff, although I was obviously concerned about the security stuff, in as much as, you know, the if anybody can, I generally agree with the thesis. Anybody can spin up anything. And it'll be easier and easier to do. And I mean, my experience with I haven't written software for a long time. I tried, I think it was Claude on Visual Studio Code. I even tried to do it in Cursor, I think. And some of the code it was writing was just hot garbage. And I found that I spent a lot of time writing my prompt to trick the code into doing what I wanted it to do. And after like iteration 8, I was like, like rather than tweaking prompts, maybe I should just learn the language and write the code. You know what I mean? Like obviously that's going to get
Yeah.
better over time. But at this point, I'm like, it creates a prototypable thing, but I don't know if I would put this
Yeah.
out
Is it actually
without
production level
an
code that you'd
actual
want to do it?
developer
Yeah.
looking at the code and refactoring everything so that it runs properly. So if that's true, if you agree with that, then what was all the YC startups were using vibe coding? Was it just to say that they were generating
It's not like
software
they
very
were,
quickly?
yeah. I mean, it's not like they were required to do it. It's
No,
more
but it was
that
a trend that they noticed,
and that trend has continued, and the I think the impetus behind the trend is like YC is known for having founders that move fast and break things, but most importantly move fast.
Yes.
And if you're a small team, you for the length of YC, you basically go from, maybe you have an app or something kind of going into YC, but most often not.
Mm.
You iterate on it, you build something, you do some customer research, you get it out. You're expected to have some sizable amount of revenue by the time demo day happens. This is all within like probably like an 8 to 12 week period, usually
Right.
closer to the 8
Right.
week period. That's a lot to take on. So
Yeah.
the expectation on the founders is to do a lot, and most of these founders are technical enough. So like you're getting them to build something. Well, what's the simplest, fastest way for them to build not just this tiny sliver MVP prototype or like man behind the curtain, but like an actual like workable thing that they could go sell? Yeah, they're going to rely on the tools that are out there, and I don't think anyone's going to argue today that that's not an amazing tool that like doesn't enable you to do more and more
Oh,
and
of
more.
course. Yeah.
And really, like we're talking about it now because of that messy middle of, but it's not always right. Sometimes it's hot garbage, but as it gets better, like there's a chart floating around. I don't know its source, but talking about and we'll talk about AI agents later, but the
Yeah.
amount of time that a single agent, or the size of task that an AI agent can take on from a time perspective, I think is like doubling every 6 months. So now it's able to do a task that's something like 10 or 15 minutes or something like that. And so by the end of the year, you're able to get up to a single task that it would go and like generate on and process on for an hour.
Mhm.
6 months after that, you're talking about 2 hours. Like you're getting quickly to the point where it's like a month long task that you might give a developer to go and solve. Like now it's a
Yeah.
single prompt that you give it to a single AI agent that it can go and solve within some period of, like it doesn't take a month, but it's like
Right.
a man month worth of, or a person month worth of time. It can go and take that on without you having to interrupt it, like with it getting it like relatively accurately correct. So,
Yeah, I think it's crazy, and it's funny because the thinking, the quote unquote thinking time, is the interesting thing for me for those prompts because you for the LLMs or whatever. Where just get, I'm like, fine, take 10 minutes. I'm going to go get a coffee. You do your thing.
yeah.
I'm willing to wait 10 minutes if it's not maybe not exponentially better, significantly better. I'm happy to go away. But I think the argument I was making, and I understand that like the this will change over time, but my argument at the moment was less about security. I think it was like about a couple things. One is, you know, um, I made the argument, and I understand how there's some nuance here, which is that putting out these, notwithstanding YC, which is a very special animal. It's a very selects a very special kind of human from a very special group of human.
Let's not put them on that much of a pedestal, but
It is not
sure. I
representative
see
of
where you're
the rest
going.
of the planet, I guess is my point. Like that 99.9% of other people building stuff
Sure.
don't operate, have the capital, have the whatever, have the mental space. So my fear was, I have a degree in computer science and human computer interaction, and I remember there was a study that showed if you showed somebody a high fidelity prototype and asked them what they thought, they wouldn't give you feedback because it looked done. Good feedback. They wouldn't want to hurt your feelings. If you showed somebody a low fidelity, like chicken scratches on a napkin, they would tell you what's wrong with you and your idea because it felt like it wasn't finished. And my worry with these no code lovable type things, I think that you can get to fidelity where you can be like, oh, I totally get this because it's a clickable thing. It's like a clickable prototype, if not a functional application to a certain extent. But my experience with most entrepreneurs that aren't YC founders is that if they don't get traction on a thing, what's really fun is producting. So you product
Sure.
your way out of
Yeah.
customer discovery problems.
Yeah.
No one's using my app. You know what I should do? Add more
Yeah.
features. And I think that they're not only no code, they're functional web applications, right? The functional applications. Then I think it sets the founder off in these really bad directions where what they really should be doing is talking to customers or figuring out why customers aren't clicking on a thing rather than producting their way out of problem. That was
Yeah.
the vibe coding issue number one. And I think the other thing that got me thinking about it was this like I don't remember the second point I was going to make. But what do you think of that?
I certainly don't think you're wrong. I would also maybe take the AI side of or the vibe coding side of that example that you gave, where it used to be in the past we'd build this prototype and then go to a demo meeting or sales meeting with a customer, or even
Yeah.
just like a customer research meeting. And so to your point, if it's a crappier one, they're going to give feedback. If it seems well done, maybe they'll not say anything and then just not buy it. Whereas now today, in those meetings, you can have this app that you've vibe coded, and then
Yeah.
in that meeting be like brainstorming, iterating with the customer, and in
Yeah.
that meeting updating that prototype like in real time. Like
Yeah. Feel
you're
like
getting to
this.
the
Feel
point
like this.
where
Yeah.
it becomes this collaborative effort. And I
Yeah.
definitely agree with your point that developers and product people often focus so much just on this product and not necessarily in what it's meant to do or what it's trying to do. And the goal of this product is to solve this problem. That's like the company's going to build a whole business around this. We have to remember that's for a customer to do something.
Right. Yeah.
And yeah, we need to talk to customers. Like there are just some founders, product people, developers, probably salespeople that still have yet to learn this lesson, and they will. But I don't think vibe coding necessarily. Uh, Maybe there's some risk that because it looks complete, customers won't give feedback. I don't know. I would bring that back maybe to the founder. The founder's job is to understand where the business is going, not tomorrow, but 5, 10 years from now. And not every business has to think that long term, but certainly the venture uh, venture return level companies. And this is, I mean, we were talking
Also,
about,
even normal companies, right? Unless you're building a meme company, you want the
yeah.
company to exist for more than a year. So therefore, you
And this is
right.
very much what's happening. Like even in YC right now, if you don't talk to the founder, so leave that aside for a sec, and you just look at like their website or prototype that they've built, it feels very small or like very nichey. And as an investor, you'd look at that and be like, yeah, but like it's not venture scale. Like, where does
Yeah.
this go? And until you talk to the founder, you don't get that big vision from it, because it's so easy to spin up these small but meaningful and productive and useful apps. And this is why we're also seeing lots of companies very quickly scale from zero to a couple million in ARR within a few months of very little work. I'm not saying that's trivial. I'm not saying everybody can do that,
I know
but
I
you're
feel like an
seeing that
idiot.
more and
Everything I read on
more.
LinkedIn makes me feel like I'm stupid, and I should
Yeah.
not
And so,
doing.
to be clear, not everyone can do that, but there are more opportunities for that. But that is not like, whereas that used to be something that a VC would be like, oh my god, this company got to a million in a couple
Yeah,
months, like throw money at them. That's not the case anymore, because
right.
you haven't learned enough to justify, like, that's not true product market fit. You've solved this niche problem, but is that the whole market? Like, did you just flood that market for that problem? Where does it go next? And
Mhm.
you still need to talk to the founders. You still need to get that long-term vision. It's great that you can build something meaningful and small very quickly today, but where it goes is the important question.
Right. And what's the intention of the founder? Like, where are they
Exactly.
driving? And obviously, like as we talked about, it's since it's so easy to build product, finding your wedge, beachhead, whatever that kind of way in is really hard, because I think that since anybody can build anything, you getting any kind of traction at all is I still think it's not as easy as it sounds.
Yeah, lots of people
Um,
just kind of luck into it, and it also makes it like that barrier to entry is basically gone.
yes.
And we started to see this, I'd say, in the SaaS world, the B2B SaaS world. Many of the pitches I was getting, like, I've seen this company, I've seen this idea. Like, you've kind of already flooded the market of ideas and early prototypes. You're seeing the same thing now with all of the vibe coded and AI focused apps. Like, they're wonderful. You can do a ton,
Yeah.
but you're starting to see the same thing over and over and over again. It's too small, it's too nichey, and again, you a VC side is going to invest in the longer term vision and where that market's going and how things are changing. Um,
Interesting. So, like, my general thesis about all this stuff is, everything's been commoditized. There's pretty much nothing you can build unless you have some deep subject matter expertise that
yeah,
requires, like, like a chat GPT. Even that's commoditized. You can just
yeah.
have enough data science and capital and you can do it. But you're never thought of it that way, which is just because you're building in a commoditized space doesn't mean your general thesis or what you want to be when you grow up um,
Yeah, that's
isn't
just your go to market.
right. Exactly. So you can look commoditized, but you're not actually commoditized.
Yeah.
Let's I think it's a good segue into what are patterns you're seeing. So I know that the last demo day was like a month or so ago at this point, but what are patterns aside from how they got there? What are you seeing in terms of where the state of the art is in terms of a tech company?
Yeah, I think you're still seeing like the current spring cohort of YC, and we're using really YC just because, like, obviously they move quickly and they have 4 cohorts a year, so you're seeing that, like,
And
they're
there's
very,
thought
very much
leadership
trend
type of
followers.
tech companies that come out of there, right?
Yeah.
Like it's not, yeah,
And so, more just to say, like, we're not putting them up on that much of a pedestal to be like,
right,
they're the ones everyone should mimic, but we can easily watch the trends by looking at the YC companies. And so
sure.
you are seeing still a ton of like AI agent for this, AI agent for dentist, AI agent for vet, AI agent for investment manager, AI. The number of VC CRMs that have an AI agent that get pitched to me as like, you should invest in this because you'd use it. Like, no, I won't. I just build my own because you built it in the weekend too.
Yeah,
But so you're still seeing a lot of AI agent for X.
yeah.
You're seeing a good number of, when on the harder tech, deeper tech side of things, still small but growing number of robotics companies. A good number in the advanced manufacturing space. So whether that's an AI agent for the manufacturers, or there's lots of basically like completely automated CAD builders, in the sense that you don't need a human kind of smoothing the edges and actually like printing the things and managing it. Like, you can really just have an AI agent go and push all the same buttons. And
Mhm.
so it really is like because you're dropping the barrier to entry for building new pieces, you're seeing more and more hardware startups pop up. So it's a lot of AI driven hardware or small bits of hardware, experimental hardware that does this. So you're seeing more and more in that space. What are some other interesting trends? I mean, certainly everything is AI based. Most things are AI agent based. And you're starting to see people kind of fall back into the hardware space. Not as much yet in the consumer space, I'd say.
Interesting. It's the state of the
But
market,
maybe
I
that's
guess.
also like where I focus. I focus on B2B. So
Sure. Do you think that, like, we talked about this before the show, last year and the year before that, even now, you're seeing AI, my value proposition is AI something something. Problem, value proposition, too many cats are roaming the streets. So I built an AI for cats or
yeah.
whatever.
Yeah.
And now it feels like shortly it'll be AI agent for cat searching. Um, is that just like you glaze over? Like, does it even
Yes, you really
matter?
have to
Like
move beyond
yeah.
just the tagline. Like sometimes the tagline gives a good enough idea of the space that they're playing in. So like if I'm investing in advanced manufacturing space, maybe I'm interested in AI agents in the advanced manufacturing space. So fine, now it's like you've helped me filter down the companies.
Only
But
because
again,
it's
until
unique
you
in that space. Like
I mean,
that
maybe even if
agent
it's
in
not unique,
manufacturing is
maybe it is
unique.
just like a high level filter that it's like we work in this
Okay.
space and talk to us if you want to learn more. And
Right.
certainly this line is different from pre-seed to like series A or something like that. So at the pre-seed, there's lots of churn happening, there's lots of experimentation happening, there's lots of small niche products happening. But I would expect that by the time you, even if you look at like a late seed or series A investment, you probably have narrowed down actually what your product market fit is, probably actually uh, what your pitch is, and I would hope that you've iterated. So you're probably not seeing AI agent for X when you're pitching to Series A investors.
Is that because it doesn't exist, or is that because that's not the problem, and the product market fit is what matters, and
Yeah,
the
the
fact that it hasn't
product
been
is not the AI agent for
right,
X. I
right,
mean, well, maybe that's like the way it does it, but that is not
yes,
the problem that they're solving. And so
yes.
once you know actually the problem you're solving, you just have a better refined pitch tagline.
Right. So the value proposition isn't we have an AI agent for, it's we've solved this problem way more efficiently. And if you look under the
And
hood,
of
there's an
course it has
agent.
AI, and of course it has
Of
AI
course.
agents, because how
Right.
could you actually do most things today if you're
An
not
X
doing
that,
that?
yeah,
So
the product. Yeah. So then, let's end off on agents. Let's end off on agents. So I did actually get accepted since we last talked to what's the crazy Chinese one?
Manus,
The so yes, say that again. What was the name of it? Manus.
Manus.ai.
The Manus is the new hotness in agents. So why don't you talk about what agents can actually do today, and what Manus's value proposition is, how you think about the space?
Yeah, and so as much as we very quickly threw around the term AI, and it
Mhm.
obviously has a lot under the hood, the
Right.
same thing is happening with agent. Mostly, I think what people mean by agent is somewhere between automated AI and uh, uh, replicated humans, in the sense that it's doing lots more. It's sometimes when you think automated, it's like you think it's pushing a single button, but really an AI agent can do a lot more than push one button. It has, you can try to give it a goal, let's say, and it will do a bunch of things. um,
Right.
Something like a Manus agent, if you then the design paradigm is the same as the chatbots. You give it a prompt, it goes and spits out the answer. So an AI agent, you give it a prompt that say, I want you to go and book me a vacation to Spain or something like that. And so the AI agent, whether it's Manus or otherwise, will probably do something like have an AI that spits out like, okay, build a to-do list for solving this goal. And then it might spin up another reasoning bot or even another agent that says, okay, well, the first step in this to-do is to just search for travel websites. And so it's able to use the internet. So it can use tools. It can use tools like code, generate code and run code, It might be able to use a tool like a browser specifically, which obviously opens up a world of possibilities. It could use a tool like writing a Word document or building a PowerPoint deck or something like that. So it can use tools in the sense that it can use other applications. And so these agents are spinning up other agents or spinning up other AI bots to kind of complete this to-do list. And assuming it all goes well and doesn't get stuck in some sort of weird error loop, it then comes back and it says, I've booked your vacation. Probably won't go so far because we haven't yet connected some payment rails, even though there's some interesting companies working on that space. But it might get so far as to say, here are 2 or 3 options for booking your vacation. And so it's automating more and more tasks. And there's a subtle line here where just the AI LLMs that used to be just like zero shot prompt and now have reasoning so they can do a little bit more. They're spending more time in inference scaling. An agent might be able to now use tools, do a little bit more, take on longer work, but it's still kind of along that spectrum of you give it a prompt, it gives you an output, and just the amount of work that it can do is growing over time.
And so two things. One is like, I think you elucidated them pretty well, but at the moment, it's like agents can write code, obviously. Agents can surf the web to some amount of diminishing returns pretty quickly, right? So like, it can't become your email assistant yet and just triage like
Yeah,
in a
it
deeper,
probably can't do
meaningful
it very
way.
well, but
Well, yeah, I don't think I do it very well either. And then is that all like you can, I mean, yes, it can do a bunch of things, but like what can you leave it alone to do? Again, I get the idea here is like there's potentially a human not in the loop, right? That's the point. And Manus's, I guess, value proposition as a company technology is it's got the orchestration layer part, right? That is the thing that it adds to the agents. Like there are coding agents, but telling the coding agent what to do up till now required a human. Now you can be like abstract that away, um, or so at the orchestration layer, that's Manus, I suppose, and there's other competitors.
yeah.
And then but the actual agents that can do things on their own, it's like browsing web, writing code. Is there anything else that you can kind of pseudo reliably rely on, or no? Not
I
yet.
mean, that reliability line, even by the time this video gets released, will probably be subtly
Yeah.
changed. And that's kind of the point. Like a lot of these companies and systems are being set up so that like we can imagine what the end state looks like.
Right.
And today maybe it's only like 6% effective, but probably a couple of years from now, maybe it'll be 90% effective. And
Yes.
what does that enable? And so you can design what that system looks like and just kind of like wait or build upon the foundational models as they get updated and released and refine which one to use for different things, or have your AI agent be kind of learning that through reinforcement learning or something like
Yeah.
that
So
over
basically, I need an
time. So
agent to keep an eye on the state of agents so that
yeah,
I
so
can know
I
what.
feel like lots of people experimenting in this space today aren't afraid of the things that don't work today.
Yes.
And this is definitely true of a bunch of YC companies. You'll build something today with the expectation that the LLM
Better.
tomorrow,
Yeah.
some tomorrows from now, will be able to just do it. And once they can just do it, like zero shot with high accuracy can just do it, you've now fundamentally opened up a new market, or at least solved a new task, and whether that leads to a new market.
So it reminds me of, I mean, this is such an old person thing to say, but like when Microsoft made Windows, it kept getting bloated. And because of Moore's Law, you just knew that the next version of Windows would, even though it's bloatier, the processing power would get so much better.
Yeah.
You just knew that it would converge in a way that everything would be just okay. So that's a great way to end it. On the forward-looking side, um, you, you're as a founder, you're kind of expecting things to drop into place. So are those the founders building at that bleeding edge? Are they basically saying, okay, first of all, I have a broader vision than this little niche that I've been able to prove out, and we all know we're looking at each other in the eye and we're like, we know that agents are improving. Say it's agents rapidly. So I just need capital to live long enough to you know hit that moment where the agent, my product market fit plus agent plus thesis, like, is that the line we're riding basically? Because if it's such a messy, noisy space, technologies and companies are coming and going on a daily basis, um, and being obsoleted on a daily basis. Is that how the game is being played at the moment?
I mean, in a simplistic way, I think I probably agree with that. But that's also not
Okay.
necessarily any different
What's
than
the
it's
complicated
always
way?
worked. Like, even if you go back
Yeah,
to
yeah, totally,
2010,
totally.
or actually, even let's go back to the .com. Like, the internet comes out, someone creates pets.com, and everything's going to be on web, and you'll be able to buy your dog food from the web. And then the .com crash happened for a few reasons,
Yeah.
but also because like it wasn't quite able to do that. But
Yes.
you could probably go back to that time and list out all of the dream-like scenarios that founders were thinking of at the time, and probably by like 2010, if not 2015, almost all of them were doable.
I think that my counterpoint is I think the difference in the argument at that I would say is that at that point, like the protocols of the internet, TCP/IP, and like we picked winners. Nobody knows what Gopher, Archie, Veronica, all that crap is. But we do know what the World Wide Web is, TCP/IP. We use news groups for.
And you're seeing exactly the same thing happen now in the AI
But
space.
wouldn't you say that like TCP/IP didn't change? It got optimized, or DNS got optimized, but the fundamental stack upon which Pets.com or Amazon was being built on, the technology stack wasn't changing. It was in there was enabling technology on top of that that made things like, oh, we need load balancers. What is a load balancer? Like that kind of stuff was created to solve
And
the.
I think that's what, like, whether you're using I guess we could get semantic about the terminology, but you could say that the foundational LLM is one of those layers. And
Yeah,
like, it's not like a perfectly defined thing. Like, an AI LLM is a little bit different than TCP/IP, but you're seeing protocols like MCP, which can
yes.
like help manage agents, or kind of help publish jobs for agents. Like, I feel like you're in that really messy uh, um, middle where people are starting to build those protocols or think of what those structures need to look like and experiment.
Right.
And there are companies being built around that today. But at the same time, I think you have the pets.com founders that are trying to just build the products, assuming all of those things just work.
Exactly.
And I don't think you're going to have like cleanly one or the other, or build it sequentially. Like, people are going to experiment with different ideas, and some are going to work and some aren't. And it may be 10 years before all of this stuff works, but it probably won't be the pace at which AI is now able to do more and more things on its own. It's just going to happen really quickly.
Yeah. So two cohorts from now, the YC cohort will just be agents.
And I
There'll
mean,
be
maybe looping back to just the
agents.
investor side for a second, that's a
Yeah.
really hard place to be as an investor. If you, especially as one where I'm not a VC fund where I have to deploy my capital within 3 or 4 years or something like that, there's kind of an incentive. If I think that the pace of technology improvement is progressing so rapidly, let's say it'll double within a year,
Yeah.
would I not be better off just sitting on my money and sitting on my hands for a year and invest in a founder a year from now?
Yes.
Because really, what it means is that the founders that I'm investing in today, I have to be convinced that they can move faster than the pace of technology today.
Yeah.
And that's an incredibly high bar.
And you did that, right? Like
I,
when we first met a few years ago, I pitched you. You said, "I don't think so." But we kept talking, and you're like, when the first I don't know, ChatGPT 3.5 or something like that came out, we reconnected, and you're like, "I'm just sitting this one out. I'm just gonna like, I'm not gonna. I don't need to deploy, so I'm gonna sit in it." And then I think we reconnected a year later. I'm trying to remember what year this is, 2023, 2022, something like that. And you're like, "Now I'm ready.
yeah. And that's,
Now I'm ready."
as an investor, you're going to think about, like, you're going to be aware of the macro, you're going to be aware of these meta trends, you're going to have a particular thesis on different areas. And I don't want to say that all investors are just trend followers. Like, it's usually that they're interested in something or have that particular thesis. We haven't always been deep tech, hard tech investors, but that's because I thought there was a different opportunity here. And now we're in that space where it's easy to build up, like, the barrier to entry in just generic B2B applications is pretty low. That's probably not a space I'm super interested in now. It's a little harder more mody to build in the hard tech, deep tech space. Will we always be here? I have no idea. But like, I don't think there's one right way to invest. You talk to 100 VCs, you're going to get a bunch of different theses on where the world is going. Some people are going to be right, a bunch will be wrong, but it's fun.
It is. Well, that's a great place to end it. Thank you very much. So, see, know your investor. Know what they're. If people want to check out Sandhill North, where do they go on the internet?
Sandhillnorth.com or shn.vc, or on, are we on X? We're on LinkedIn. I'm just one person. Really, just email me, and some AI agent will probably respond to you. Or if you pitch us and it doesn't think you're a good enough fit, it'll probably ignore you. But you should just reach out and talk if you're building something cool.
That's great. Well, thanks for coming on the show, and we'll see you on the next check in with Ryan. Maybe that's what we should call the show now. Thanks,
Take
Ryan.
care, Rob.
Thanks for tuning in. Keep building, and see you on the next episode.